Stan is here today to talk about financial planning. And with that,
thank you, Natalie. And indeed, it really is a privilege to be a part of this Chick-fil-A Impact Accelerator with Plywood and two great organizations. And I really want to thank each one of you for participating today. Of all things you could do on a Thursday afternoon after lunch, just stay behind and talk about finances is incredible. So I'm going to do my best to keep this exciting and help keep you awake. So we're going to do this rapid fire. I've got about 20-25 minutes to give you about 4 hours worth of content. That being said, I've also been a middle school and high school teacher, so I'm used to a lot of interruptions. So even though we're slated for me to present for about 25 minutes and then some Q&A on the end, I'm also prepared if you've got a burning question and you want to stop me right now while I'm presenting on the topic, I'm happy to do so. And I may ask you to just make sure you put that in the chat or the Q&A, and then Natalie's going to help monitor that for me and make sure I get those specific questions or your chat addressed. Just a little bit of background about myself. Again, thank you, Natalie, for the introduction, but just a little additional color commentary that might help you understand my framework. I was actually born and raised overseas, grew up speaking Spanish, learned English in school. I came to America for high school and college, got married right out of college, and my wife and I moved to Alaska, where we lived in the North Pole for 7 years, and then Kodiak Island for 6 years. And so with that, I've just had a variety of experiences working everything from, like I said, teaching in a private school and being an assistant administrator, being on staff at a church. I started a not-for-profit flying organization, flying missionaries and church attendees into the rural parts of Alaska. I ended up working for the state of Alaska Fish and Game, doing their accounting. Ended up working for a residential group home facility in Kodiak, Alaska, working with at-risk youth. I've been the practice leader of a not-for-profit CPA firm, and then I also got to be the administrator for a law firm with offices in Seattle, Anchorage, and Kodiak. And that was the one of the firms that tried the Exxon Valdez case back in the 80s and 90s. I moved to Atlanta in 2000 to go to work for another not-for-profit. And so again, most of my career has been leading not-for-profits internationally as well as nationally. So I'm really delighted to spend the afternoon with each one of you who have this passion for greater good to serve our local community here in Atlanta. So with that, let me see if I can share my screen real quick and we'll get started on some of the questions and some of the presentation that we have for us here. So just in case you might be in, I want to make sure everybody's in the right one. We're going to talk a little bit about budgeting and financial planning today. And so with that, let's just kind of get started. And just a quick note, obviously there's always, from a professional perspective, there's always the disclaimers of what we're doing and what we're not doing as far as legal advice without any specifics about your organization. But I really want to, what I'm hoping to do is in our time together this afternoon is really try to address some of these questions. What is it that's keeping you up at night? What's your biggest pain point as an organization? Do you have the right people in the right places? Using Jim Collins' good to great analogy of, are the right people on the right seats on the bus? What resources do you need to assess if you need assistance? So if you don't have everything you need, where do you go? How do you get what you need? And then maybe if we have some time at the end, we can talk a little bit about some of the growing trends on outsourcing some specialized activities that not-for-profits don't have the expertise for, that allows them to focus on their mission. So within that, there's here's the agenda for this afternoon for our conversation. And again, no need to really take notes unless you want to. I think these PowerPoints will be available for everybody. And certainly my contact information will also be available for everybody if you want to follow up with any of these points. Let's talk a little bit about some of the best practices within a not-for-profit. And certainly, nobody wants to talk about these, but because as a firm, Cape and Cross is a national CPA firm. We work exclusively in the not-for-profit space. We have 15 offices across the United States. So this is all we do. So we see a lot of common mistakes that we're trying to help organizations with. So here's some the 5 most common financial mistakes we see not-for-profits making. One is they just don't have adequate checks and balances. They don't have the right internal controls. There's an unfamiliarity with the financial and accounting systems and the accounting standards. A lot of times, the accounting system was installed and it's been 2 or 3 or 4 generations, i.e. it's been 2 or 3 people involved in the accounting department since the last person was trained on the system to understand how it works and how to use it effectively. And then certainly the not-for-profit accounting world has become far more complicated with a lot of new regulations and guidance both from the AICPA and the IRS. And so making sure you're current with all these accounting standards is critical. Unfortunately, having been in the not-for-profit space most of my life myself, we're so busy and passionate about the mission we're called to do that we don't always want to pay attention to the budgets and forecasts. And certainly as leaders, we want to get out and do and not worry about just all this attention to detail and the number stuff that we want somebody else to process. But we really do need to pay attention to that. We also see a lot of incorrect payroll processing. We'll talk about that. And then unfortunately, because we've not paid attention to the first 4 items, whenever there's a financial crisis or a turn, a shift, a pivot, we're not always prepared. And so we react without having adequate financial information. So counter to that, we also see some organizations who have some fantastic best practices, and we want to share what those are, and then we'll go a little bit deeper on these today. Number one is one of the best practices that we see organizations do, and is that they focus on strong internal controls. We'll unpack that next. Having a healthy understanding of basic accounting. There's some basic things that we all need to do, and then certainly ways to get the expertise on some of the additional technical items that you can go to your local CPA firm. We also know that organizations who use budgets and forecasts effectively are the ones that are growing and having the greatest impact on their communities. Certainly, we're seeing a lot more not-for-profits getting themselves in trouble because of tax situations. A misunderstanding that not-for-profits are tax exempt on a lot of areas that are not true. So we'll highlight that for just a few seconds here in case that applies to anybody. Certainly we'll outline some times where it might be important for you to seek professional assistance, and then some ideas and thoughts on when you may want to consider outsourcing to be able to maximize your organization's impact and accomplishment of your mission. Unfortunately, organizations that don't have the right internal controls end up finding themselves experiencing fraud. And fraud, or the financial misconduct, the theft of taking, takes place normally within these 3 categories: cash receipts, cash disbursements, and payroll expenses. So we're going to talk a little bit about those internal controls because most of the fraud takes place within these 3 areas within the not-for-profit setting. The ACFE, which is the Organization for Certified Fraud Examiners, tells us in the most recent report that the average loss to fraud in the not-for-profit space is about $75,000 per event. Now that's a lot of money for most of us in the not-for-profit space, and there's a lot of things we could do with that. Now certainly we see it much higher than that in some cases, but again, that's the average. And unfortunately, what we find is that within the not-for-profit space, this fraud has a much greater impact on the financials of the organization than the for-profit space, because the balance sheet, the income statements are typically much smaller. So this $75,000 fraud, average fraud, has a much greater percentage impact. Plus, because these are donor-driven, grant-driven organizations built on trust. When that money disappears, those donors, those grantors, think twice about the impact of their gift, and they're going to keep giving if there's a risk of it being stolen or misused again. Interestingly enough, a lot of people think that a financial statement audit or review will be the best way to detect fraud. Unfortunately, the audit and the financial statement, or the audit and review of your financial statements, are not the best way to detect fraud. That's not what they're designed to do. Indeed, the best and strongest tool that you have are tips from staff, donors, or your constituents who may suspect that there's something going on. Let me just briefly address the fraud triangle. There's 3 things that need to take place for fraud to take place. There has to be an opportunity for that to happen, an incentive, and then rationalization. The opportunity is one that certainly the organization, your ministry, your not-for-profit has a lot of control over. Are your internal controls so lax that you're leaving the door open for the theft to take place, for that fraud to take place? So there's a lot of things we can do to close the door of opportunity. the incentive is certainly the larger the organization and the bigger the opportunity, the incentive to steal greater amounts does create that larger incentive. And typically what we find is the rationalization is historically in the work we've done and my personal experience in work with not-for-profits is the employee who's involved in the theft at the time, the fraud, rationalizes this because they have some unique or distinct need that they need the funds for, and they feel that they deserve it more than the organization. So whether it's a family illness, a family addiction, a personal addiction, a health crisis, or maybe they feel like they're underpaid, underappreciated, and they take advantage of it. Again, we all recognize that the rationalization doesn't have to be true, and rarely is it. But again, that's the third point of the triangle. So specifically, and I'm just going to pass through these for the sake of time since we're trying to get back on track with our time this afternoon. But I can certainly provide you with a lot of illustrations. These are some of the most current illustrations of some fraud that's taken place that has come out in some of our recent reports, where you can see a $25 million event at a foundation in New York, $6.7 million with United Way in Massachusetts. The St. Luke Foundation in Kansas City had $557,000. Cystic Fibrosis Foundation in Bethesda, just under $300,000. So again, these are much higher than that $75,000 average. But again, you can see these would be on the higher side. So we want to start talking about how do we control this to keep this from happening. The first item we talked about was just the cash receipts. And so if one of the best ways to safeguard against fraud is strengthening these internal controls. So there's 4 points here. We want to use proper segregation of duties, and we'll unpack that. You want to have at least 2 unrelated people that are counting and collecting the incoming donations in a secure environment. You want the counters to fill out a count summary and sign for verification. You want to process checks and cash immediately or lock in a secure location only accessible by authorized personnel. So by segregation of duties, excuse me, what we mean is the people collecting and processing those deposits should not be the ones taking the deposit to the bank, nor should they be the individuals keying the information into the system. So you want to have at least 2 different people involved or 2 different groups of people to ensure that one person can't collect the money, pocket some of the money, make the deposit and the changes, and then record it, and nobody would ever know the difference. So having different people involved makes it much more difficult. On that last item, when you have checks coming in, one of the things we also recommend is to what we call immediately or as quickly as possible, restrictively endorse those checks for deposit. You should have one of those stamps, ink stamps that you can stamp the back of the check if you're processing your checks manually, or certainly if you're a larger organization and you've got remote check capture from your bank, you want to process those checks, usually on a daily basis, run through the scanner, and where they become digitally or electronically deposited to your bank account. A couple of other items on cash receipts. You want to make sure that the designated giving is properly recorded in the accounting system. So if you've got restricted giving from either grants or contributions coming in, you want to make sure that you're noting that and restricting it in the accounting system so you can account for the fact that those funds are being used in a segregated or a designated fashion to accomplish and fulfill the restrictions on those gifts that are coming in or those grant dollars coming in. You want to ensure that the contribution records for the member, donors, or grantors are maintained and reconciled. Again, we highly recommend that on a monthly basis, you reconcile your donor management system, your CRM, to your general ledger to ensure that all the funds being recorded in the donor system match the deposits going into the accounting system. And then the third piece of that would be to make sure you're reconciling your bank statements every month and that you're monitoring those financials every month and having somebody in senior leadership and possibly even somebody on your finance or audit committee reviewing those at least quarterly. Moving to the cash disbursements on internal controls, again, segregation of duties is critical. That'll be a common theme where you want different people doing different parts. You want to make sure that the invoices are properly approved by a qualified person. The person spending the dollars who knows what they were spent for should be coding and documenting what not-for-profit or business use was, and signing off. So if it's a meal with a vendor, a meal with a donor, a foundation, or whoever that is, document what the business purpose was and which department or which code it needs to go against. Then once those are approved, then you want to make sure somebody else is inputting those into the system for payment after they've been checked for accuracy. And then you want to make sure that the check requests are properly documented and the entire package is approved. You want your check signers to inspect the supporting documentation before signing. Now, a lot of this sounds like it's paper-based, and we do this intentionally because a lot of the smaller organizations are still paper-based on everything they do. But certainly all of this can be done electronically if you're on a digital platform. Dual check signatures, even though are not required by the bank, and many times for a smaller organization are still a best practice, unless you've moved to an EFT, ACH, or digital checks where there's a different way to ensure that the payments are authorized appropriately. Here's a couple of additional things associated with the cash disbursements that we find a lot of lackness where we would really like to encourage everybody to strengthen your internal controls. Number one, you should never sign a blank check. If it doesn't have a dollar amount in the numeric section or the verbiage, the wording, do not sign a check to let somebody else fill in the amount. That's one of the worst cases for fraud. Again, checks should rarely, or you should most likely prohibit checks to be issued and paid to cash. It should always have a vendor, an employee, or somebody's name in there, not cash. The other thing we find way too often is that blank check stock is stored on a shelf instead of secured in a safe. So make sure you're keeping all the blank check stock securely safeguarded away from just access or for people walking by to get. Another item we see happening more often than we care to admit when we are auditing clients is that duplicate invoices get paid regularly, and a lot of times this happens because invoices end up getting paid through their statements instead of invoices. So if a statement is submitted for payment, we highly suggest that you reject that and ask for the invoices instead. And if those invoices are missing or lost, simply call the vendor and ask for those invoices to be reissued. Again, when you're doing bank transfers between bank accounts or banks, make sure each of those are properly approved, especially if those are electronic. Excuse me. Another issue we see a lot of abuse in is within credit or debit cards for an organization. So we highly suggest, if you're going to use this as a not-for-profit, that you make sure you have good policies around this, including who's responsible and who's accountable. Only the authorized personnel and staff should have access and should have a credit card. What we find is some organizations only want to have 2 or 3 credit cards issued, but then everybody has a photocopy of the credit card, or they have access to the number, and now you have 15 or 20 people using the one credit card and nobody knows who's buying what. So if you're going to have lots of people using the credit cards, it's better to have them issued their own credit cards so you can track who purchased what on which card and hold those individual staff members accountable. You should never allow personal charges on an organizational credit card or debit card. Certainly we understand that on occasion an error can take place, but by policy you can have that set up where if you have a charge, a personal charge on a corporate card, you can either have that reversed quickly at the vendor, or you notify your supervisor or the accounting department immediately, and then there needs to be a written plan on how that gets resolved as quickly as possible. So again, these all talk about policies and approvals because we see a lot of financial misconduct within this area as well. One of the best safeguards on the, not on the preventative side, but on the detective side for internal controls, is that you make sure you're reconciling all your bank accounts and all your ancillary modules, your accounts payable, your payroll, and your donor management modules on a monthly basis to make sure that they're all tied in correctly and each account is actually matching as it should. Again, don't have the person doing the reconciliation who's actually doing the data entry, because if they're Cooking the books, if they're making changes in the transactions and they're actually getting to correct it and hide it through their bank reconciliation, you'll never see it. So you want a different person who's doing the data entry from doing the reconciliation, and then a third person doing the review. And it doesn't all have to be within the accounting department. If you're a very small organization, you can have other leaders in the organization that can be trained to do this without a lot of accounting knowledge otherwise. Certainly, you want to make sure you're maintaining all your monthly reconciliations every month in anticipation of your audit or your review. And speaking of audit and review, every state has different requirements for when you're required to have a review or an audit. But here in the state of Georgia, if your revenues exceed $500,000 a year in revenue, you're required to have a review by the state of Georgia. And if you have revenue in excess of $1 million as a not-for-profit, the statutes indicate that you would need an audit. Payroll is the next item where we see a lot of issues with internal controls. You'll hear this again. Segregation of duties. The person who's approving the payroll should be different than the person entering the payroll and issuing payroll checks. You want to make sure that there's proper confidentiality, that you've got the right training and password protection, because there's a lot of private, sensitive, and personal information, both on the individual employee side as well as the organization. Get hacked, or if you're going to have anybody access this information, there's a lot of information in these files. So this would be one area that we highly recommend that you would consider outsourcing your payroll service to a payroll provider. I mean, we're a CPA firm, we're a national CPA firm, and we outsource our payroll for that purpose. Certainly, we've got a payroll person who's processing our payroll regularly per period, but it's all processed through another firm. Just because you outsource this or you're having it automated through a system does not mean you should not be inspecting your payroll records. And so we highly recommend that you do a reconciliation and you review your ledgers, again, on a monthly basis or a quarterly basis. We highly suggest at a minimum on a quarterly basis that you're reviewing for any changes to the payroll files, i.e. pay amounts, new employees, deleted employees, or changes in benefits or pay rates. That's just a critical piece, but certainly on a monthly basis, you want to review, have someone who would have insight but not involved with the processing or paying of payroll, reviewing that payroll register to ensure that there are no phantom employees or that there's nothing, no duplicate payments or payments out of the ordinary. Let's move on to management, and management has a significant responsibility here as well. And so let me talk to us here now. Many of us in senior leadership need to really understand our responsibility and how some of the functions within finance really do play into the internal controls, not just for safeguarding our financial assets, but it also helps us be informed in decision making. So preparing an annual budget is really, really critical, not just to help you make better decisions about the new fiscal year, but it also then gives you an insight into what you expect to spend on a monthly basis. And if those amounts are significantly different, then this gives you an opportunity to take a look at what's going on and look for why those variances exist. We also highly recommend that any manual journal entries be reviewed and approved on a monthly basis, and there should be a process that allows these manual entries to be approved before they're posted in the system. You should certainly be reviewing your financial statements, your balance sheet, your income statement, or more specifically within the not-for-profit community, your financial statements would be called the statement of financial position or the statement of financial activity. You need to do that every month, and your board should be reviewing that at least quarterly. Talking about financial reporting, I'll go quickly as I'm going to try to wrap this up. By the way, we probably won't get through all of these issues today, which is fine. You'll have access to the PowerPoint, and certainly you'll have my email to follow up if you have any questions. But the budgeting process, financial reporting, and some best practices, you should really start about 3 months before the end of your fiscal year, which will give you a lot of time to process and determine what your strategic plan is. And then as part of that, you should, as a senior leadership, we find the best practices is the senior leadership to really kind of put the fences around the amount of money you want each department to spend, and then allow those teams, those leaders within those departments or initiatives to determine how best to spend those dollars to accomplish the strategic plan to maximize those outputs. Don't forget, the budget is not an absolute ending, it's a destination, and it's never going to be right. A budget is an estimate, a best guess of where you think you'll be and what you're trying to work towards. Your actuals will rarely ever be the same, but it is just an estimate. So don't be too hard on yourself if you don't match it up exactly. Obviously, the better you are at budgeting, the better your processes and better information. I'm going to skip the next one here real quick, just try to get to a couple more really quick ideas. Financial reporting best practices. We're certainly in a time, especially with innovation, and Dan Cathy's presentation earlier talking about innovation and technology. Automation really is your friend, and we're highly recommending that a lot of organizations need to think about what we call a tech stack. What software should you be bundling together and automating your systems as best as possible to remove the manual effort that it takes, reduce the amount of time that it takes. It will actually lower your labor costs. It will improve and increase your internal controls, and it'll give you much faster and better information. So you need to certainly be considering that. Payroll taxes, I'm probably going to skip. There's a lot of issues there around payroll and benefits, whether you're an employer or a contractor. But I want to get probably to another item that within our group that we're talking today is one that we need to probably talk a little bit more about. If you're doing any innovative things within your organization that may be generating revenue that's not directly associated with your mission, or you may be having a little bit of a for-profit entity, you'll want to make sure you're aware of what we call unrelated business income. It's not a bad thing. You may not even have a tax impact from it, but there are additional tax disclosures that you'll need to report on your IRS Form 990T. It is different than the Form 990. It's associated with it. But again, if you have more than $1,000 of gross income from unrelated business, then you need to use this. And then you may or may not have tax, but if you will definitely want to work with your CPA to make sure you're making them aware of it and let them help you calculate that impact. So as we close our time, here's some things we want you to think about. As an NPO turns over management of a particular process to a third party that specializes in a process, here's some things you want to think about. A third party operates the process far more efficiently. So think about a payroll company, that's all they do. If you have them helping you, that allows you to focus on the mission of your not-for-profit and the passion of why you're there leading. Some other common outsourcing activities would be such as accounting, payroll, HR, certainly within certain organizations, even facilities management and landscaping, et cetera, become outsourced along with janitorial or environmental services. Why do we highly recommend that? Well, these organizations, that's all they do. They're focused on it both from a professional and technical aspect. They can do it far more efficiently, far more effectively, and most importantly, it will allow you as a leader to focus on your core mission and vision. So it will save you time, save you money. It will help you sleep better at night. So as a leader, we really highly recommend you think about these in advance, be proactive. Again, in a not-for-profit environment, you've got to trust, but you have to verify. Trust is not an internal control. Having timely, accurate, and valuable financial information is critical for you as a leader so you can make informed decisions and make better decisions about the future, certainly in times of uncertainty as we've experienced the last 15 months. Compliance is just as important in an NPO as it is anywhere else, if not more important. Not-for-profits are really measured against their compliance, so it's important to understand what those compliance requirements are and that you're meeting those. So again, as we conclude, we said we wanted to discuss what keeps you up at night. And if any of these things keep you up at night, hopefully we've answered some of those questions. If these have been any of your pain points, we hope that we've given you some direction of how to solve those or where to get answers. And my guess is right now you're thinking about some of the right seats. If they're the right seat, you're a team and that they're leading and driving their particular area of responsibility. And if you're struggling, maybe this is helping you identify that you need to maybe change seats on the bus with different individuals. And last but not least, certainly we encourage you to reach out to your local CPA, the person you to get advice.